If you run BigBear through any standard financial screener right now, it flashes neon red. Retail investors are panic selling a 38% revenue miss and running from a terrifying 1 billion share dilution. But while retail flees, Goldman Sachs just aggressively increased their stake by 570%. The market is currently witnessing a massive tug-of-war. Long-form fundamental analysis requires looking past the immediate headline shock and following the liquidity. Management utilized the transitional pain of the last year to execute a massive balance sheet restructuring. The company wiped out roughly 90% of its debt and currently holds a substantial war chest of $462 million in cash. The institutional bet here is clear. They believe BigBear is transitioning from a distressed software vendor into a primary digital architect for the US military. To understand the institutional interest, it is critical to examine what BigBear.ai actually builds. The company is not focused on generic enterprise chatbots. They are developing the digital command infrastructure for the United States military. A core validation of this strategy is their $165 million Global Force Information Management (GFIM-OE) prime contract with the U.S. Army. Historically, the military has managed global troop readiness, equipment deployment, and logistics through a highly fragmented web of legacy systems. BigBear.ai is tasked with unifying that massive data pipeline into a single AI-driven operational environment intended for use by top-tier commanders. Add in their new $13.2 million Orion DSP contract, and the picture becomes clear. They are now deeply embedded in the operational frameworks used directly by the Joint Chiefs of Staff. Their core mandate is aggregating highly complex classified data and translating it into actionable deployment intelligence. The technological strategy driving this integration relies heavily on recent mergers and acquisitions. Over the last 18 months, BigBear has utilized its capital to bolt together 3 distinct platforms, aiming to create an end-to-end defense intelligence ecosystem. First came Pangiam in early 2024, bringing advanced vision, AI, and biometric facial recognition capabilities designed for border security and threat detection. Second, in January 2026, they acquired CargoSeer, integrating AI-powered global supply chain tracking and trade risk identification. Finally, the company executed the $250 million acquisition of Ask Sage, a highly secure agentic AI platform reportedly deployed across 100,000 users and 16,000 government teams. When integrated, these 3 platforms form a comprehensive Vision 2 action pipeline for national security. Defense agencies can utilize Pangiam to monitor border and facility access. They can deploy CargoSeer to identify anomalies in the supply chains behind those movements. Finally, they can leverage Ask Sage's secure generative AI to instantly analyze the aggregated threat data and formulate a response. This unique integration of intellectual property is exactly why the intangible asset score on our Moat analysis dashboard remains a highly defensible 4 out of 5. Technology is only half the equation. The mechanics of how that technology generates cash is equally important. Historically, a significant portion of BigBear.ai's revenue came from professional services, essentially acting as high-end IT consultants for the government. While consulting generates top-line revenue, it carries notoriously low margins and is difficult to scale. However, analysis of the company's business engine indicates a deliberate shift in revenue quality. The integration of Ask Sage and the deployment of their core platforms represent a transition toward recurring software subscriptions. The market assigns significantly higher valuation multiples to software-as-a-service models because platform usage provides predictable, high-margin cash flow. BigBear is actively attempting to migrate its core B2B enterprise and government agency customers off of one-off consulting contracts and onto scalable, recurring platform licenses. This shift is the fundamental prerequisite for achieving long-term profitability. To determine if this transition to software is viable, the quantitative moat must be evaluated. According to the Moat analysis dashboard, BigBear maintains a switching cost score of 3 out of 5. This metric is crucial for institutional investors. Once a massive organization like the U.S. Army integrates BigBear's AI platforms into its core global logistics framework, removing that software becomes exceptionally difficult. The data migration, personnel retraining, and workflow disruptions create a powerful vendor lock-in effect, ensuring that these government contracts remain incredibly sticky over time. However, the moat is not impenetrable. The company's pricing power sits at a moderate 3 out of 5. While specialized AI solutions can command premium pricing, the defense technology sector is experiencing intense market competition from heavily capitalized players like Palantir and Booz Allen Hamilton. This competitive pressure, combined with BigBear's current net losses, suggests that their current pricing power is limited. They must win government bids based on superior technological integration and security capabilities rather than sheer market dominance. This operational foundation leads directly into management's forward guidance. By all accounts, 2025 was a restructuring year. The company absorbed significant M&A integration costs and cleaned up the debt profile. However, management's narrative for 2026 indicates a hard pivot toward commercial and government monetization. The company has guided for 17% revenue growth, targeting between $135 million and $165 million for the 2026 fiscal year, with the intellectual property from Pangiam CargoSeer and Ask Sage now fully under the BigBear umbrella. Acquisitions expected to generate significant annual recurring revenue. The company is attempting to transition out of its heavy R&D phase. The strategic focus is shifting towards securing those high-margin, multi-year software subscriptions discussed earlier, which are critical for stabilizing their historically lumpy contracting revenue cycles. Objective analysis requires a rigorous look at the financial distress metrics, and for BigBear.ai, the bear case is severe. Based on the fundamental data, the company carries an Altman Z-score of -0.89, placing it firmly in distress territory. In 2025, they posted a staggering net loss of $293.9 million and burned through $42 million in negative operating cash flow. The retained earnings sit at a massive deficit of over $865 million. The authorization for 1 billion new shares remains the heaviest overhang on the stock. While management claims this authorization provides necessary flexibility for future M&A and balance sheet protection, it represents a mechanism for extreme potential dilution. The company boasts a healthy current ratio of 1.78x and a massive cash pile, but that liquidity has come at the heavy cost of shareholder equity. This is the ultimate execution test. If management fails to convert this $462 million war chest and their recent acquisitions into actual positive cash flow, that 1 billion share authorization could severely compress the value of existing shares. BigBear.ai is a highly volatile battleground stock, caught between severe fundamental cash burn and a visionary defense ecosystem. With their legacy debt largely eliminated, a $462 million cash position, and the Ask Sage acquisition instantly upgrading their generative AI capabilities, they have assembled the tools necessary to compete as a premier digital architect for the U.S. military and global border security. However, the clock is ticking on profitability. The market is currently weighing the evidence. Is this a struggling tech startup that will be forced to continually dilute its shareholders to survive? Or is it an emerging cornerstone of the Pentagon's data infrastructure trading at a transitional discount? Let me know your thoughts in the comments. For all the tools, financial dashboards, and deep dive analytics used in this video, check out the link to worldwideweb.stock-teller.com in the description below. Remember, this is not financial advice. You're watching Stockteller, where every ticker has a tail.